Let's discuss the income statement in more detail. An income statement will tell you how much money is coming into you, okay? And that's called revenue or sales, which is the same thing. And some people call it the top line because revenue goes at the top of the income statement. And the bottom line, what is our bottom line? That's net income at the very bottom. Okay. And it also tells you money out, okay? And revenue or money in minus money out or expenses equals net income. Pretty simple. Great. So let's drill down a little further, okay? And we're going to talk about an example here. You have a company and you sell apples, okay? And you sell them for $2 each. And that's a Canadian $2 coin. It's a polar bear. Pretty cool, eh? Okay, so you sell an apple for $2 each, okay? And you sold 6 apples, okay? So that's $12 in revenue. Now, in terms of expenses, it costs you $1 to make 1 apple, okay? That's a Canadian $1 bill. We call it a loonie. Represent. I'm Canadian here. Okay, so it costs us $1 each to make an apple, right? And we made 6 apples. And so the cost of goods sold, right, is $6. Okay, so revenue minus expenses, right, equals the revenue minus the cost of goods sold, right, equals your gross profit. Okay, let's move on. And then we have labor, right? You work in this great company and you made $1. Okay, and there's another expense called depreciation. Okay, and this is a beautiful thing, but it's not cash out of your pocket. And let me drill down and explain it in more detail. Okay, so you buy a truck, right? Your truck is going to last you for 10 years. You paid $10 for it, right? And so every year you're allowed to depreciate that truck, okay? There's wear and tear on it. And basically that means that you're going to pay less tax. And this will all make sense in a second, okay? So over 10 years, we get to write off $10, okay? $1 this year, okay? And then we get $1 next year, yada, 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 rinse, lather, repeat, you get it. $10. Cool. And so that is depreciation, okay? And it's a beautiful thing because what we're going to do now is calculate taxes. And we're going to pay a little bit less tax. If we didn't depreciate this truck, we pay more tax, right? Okay. So what is our tax going to be? Well, our pre-tax net income is $4. 12 minus 6 minus 1 minus 1, $4. We're going to get taxed on that $4 now, okay? And if we did it and we pay $1 in taxes, which is say 25%, let's pretend that the tax rate is 25%. If we didn't depreciate that $1, right, for the truck, then we would have paid taxes on $5, right? Which means that we would have paid more in taxes. Okay, so now net income is $3. Now, let's take a closer look. Revenue, earnings, okay? Revenue is what we're going to spend a huge amount of time on in this course. It's more important than any other line item on any financial statement. And the reason is that once you forecast revenue, everything else in your financial models, pretty much, is just a percent of revenue, okay? And this will make a lot of sense to you when we do the modeling section of the course. So the top line is 12 and the bottom line is 3.